Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. Our next investor conference is less than 3 months away, the Planet MicroCap Showcase Vancouver. It's coming up on September 6 and 7, 2023 at the Fairmont Waterfront. Be sure to check out the last episode with Paul Andriola, founder of Small Cap Discoveries and lead sponsor of our event, to learn more. To register and attend, please go to planetmicrocapshowcase.com. See you in Vancouver. My guest on the show today is Chris Wood, Chief Investment Officer of RiskHedge. Founded in 2018, Chris and his team at RiskHedge run a newsletter helping subscribers anticipate and profit from the biggest disruptive trends shaping our world. They look at opportunities everywhere, but Chris has an affinity for microcaps where he can deploy his own proprietary chaos formula to find disruptive companies within the microcap ranks. In our conversation today, Chris shares what his chaos formula is, which stands for change, hype, acceleration, ownership, and size, and applies that formula for a few investment ideas he's looking at. Chris also recently attended our conference, the Planet MicroCap Showcase in Las Vegas, as well as LD Micro, where at both he did a ton of meetings with management teams. So I wanted to get his take on the message he's hearing from CEOs. Thank you again for tuning in to the Planet MicroCap podcast, and please enjoy my conversation with Chris Wood. Chris, thank you for joining me today. How you doing, man?
Bobby, it's good to be here. Thank you. I'm looking forward to this. It's going to be fun.
Absolutely, man. And again, thank you for jumping on. And also thank you for, it was great to finally meet you in person in Vegas. You know, I know you attended a few of our virtuals over the years, so it was cool that we were just talking offline about this. Like everything's back in person. So it's nice to finally put, faces to the name.
Yeah, absolutely. It was great. I mean, the online virtual stuff is great because, everything's recorded and you can go and see everything. But, there's just something about the vibe being there. You get so much more out of it, interacting 100%. With everybody.
Yeah. Speaking of which, let's talk vibes. I mean, we'll get into your background and RiskHedge, and I can't wait to learn more about RiskHedge's chaos formula, which we were talking about a little bit. But I'd like to get a vibe check. A little microcap vibe check. Like I said, you came to Vegas. We got to hang out a little bit. You did a bunch of one-on-ones. You were telling me offline you were also at LD and here in LA this last week. So what's been kind of the tenor amongst, all these microcap management teams and talking with other investors? Like to hear, you were on the ground. You're the journo on the ground there. Let's hear it.
Yeah. I mean, to me, it just seems like a lot more cautious optimism than, we've seen in the past, maybe 18, 19 months now, in the microcap space. It was just so tough for so long. And granted, it's still tough to get capital for a lot of these firms, but, the ones that, raised money when they didn't need to, which is of course, the right thing to do. They're sitting pretty and, they're still executing and, they think the market's they're going to come to them. Right. Like, so, it really is, it was electric at Planet MicroCap Showcase in a lot of ways. The same thing I felt at LD Micro, both from the investor side and from the company side. And they're trying to obviously temper. You can tell, investors are getting itchy, man, for the FOMO, for the risk on, and we're starting to see it a little bit in, in the markets themselves too, with small caps, starting. Obviously, there's no great microcap index, but small caps starting to do a little bit better. So, I mean, I'd say I could classify it as cautious optimism, but a lot more optimistic than I saw like a year ago at this time, basically.
Yep.
I don't know if that jives with what you're seeing.
Nope, that definitely jives with what I've been seeing. You know, you brought up a funny point. Well, it's not funny, but I guess it was one that I was talking with a colleague who's in investor relations, and we were talking about this idea how, you know, when the markets were crazy and microcaps, and the old adage goes like you raise capital when you don't really need to, you know, right. And it was during that time that everybody was just like, you know, like, nah, we don't need to raise capital. Like markets are going to go on forever. Yeah. And then, you know, of course, the last 18 months has just been kind of an SHIT show for microcaps. Right. And here they are now like struggling, or some, not everybody, but some of them are definitely struggling with, you know, needing to raise capital and whatnot. So that's been an interesting thing that I've seen and had conversations with in the last few months. Is just companies being like, oh yeah, no, we back when throw a dart and everything was hot, right? And,
yeah, absolutely. Yeah, beginning of 21. Yeah.
Yeah. So I don't know. So it sounds like that now there's a lot of, it sounds like amongst management teams now there's a bit of I guess regret in some respects.
Yeah, it seems like it for sure. But I mean, a lot, you know, like I said, a lot of them are, you know, being really, really, really good at managing their cash and, you know, executing on their plans still. And, you know, just like still a lot more optimism right now, I think.
That's for sure. I mean, anything else that we've kind of missed I mean, we've only been talking for 5 minutes, but I mean, in terms of just like from boots on the ground, being in Vegas, being in LA, you know, like, is there anything, you know, like, look, in Vegas, I'm running around like just making sure the conference is going well.
Like a madman,
so
yeah.
So you tell me, you know, like, is there anything I missed?
No, I mean, I would say like I'm having a problem I've really never had before, and that's, you know, too many good ideas. It just seems like they're, you know, especially, you know, now still that the, you know, valuations are still really out of whack for a lot of these firms. I mean, to the point, you know, pennies on the dollar really, and, you know, trading for cash or below cash, and, you know, not burning and actually generating revenue, and, you know, and all these things. And so, and, you know, all this disruptive technology that's coming out. It's not like, you know, the hardest part of my job forever has been finding, you know, one really good, you know, stock to recommend, like, let's see, each month. Now it's just like, wow, there's so much good out there. There's so many good ideas. It's all right. Well, okay, who's the cream of the crop from this? And you know, I mean, are we going to have like a prolonged window to be able to get positioned in like in a lot of these firms versus, you know, just get into having a chance to get into a couple before everything just takes off again. You know, so we'll see. But yeah, I will say that is literally new to me, you know, just having too many good ideas to sort through at this point. So it's a good problem to have, obviously. But
yeah, no doubt.
Speaks to the strength of the space in general, especially relative to its valuations.
Well, you know, maybe, you know, there might be some people listening to this and being like, all right, microcaps are getting killed. So just that mean like, all right, a bunch of crap is now more crap, you know, like that's, you know, listen, it's what we're the redheaded stepchild of the stock market. What are we going to do? Right. Like, this is our burden to bear. You know, but for those maybe listening to this and being like, all right, okay, I'm open to understanding that some of this crap may not be crap now, you know, because of how depressed microcaps has been over the last 18 months. What has been some of the criteria, some of the things that you've been looking at where amongst the pile of maybe potentially good ideas, you're like, okay, this is some of the cream of the crop right now? Yeah,
I mean, well, so everybody has their, you know, I guess their stock screening, like investment formula or whatever. You know, like, well, at RiskHedge, we're all about disruption, right? You know, that's our investment philosophy. You know, that essentially that the opportunities that come from disruption are, you know, they're often overlooked and misunderstood by folks who focus, you know, too much on things like, you know, what sector you're in and things like short-term price movements rather than, you know, long-term growth potential. And, you know, and put simply, you know, we view disruption simply as just innovation that upends a market status quo for the better, you know, making things better, faster, cheaper, enabling game-changing trends in companies to thrive. So our investment strategy is like a top-down ideation looking into disruptive trends like artificial intelligence, you know, trends that will continue no matter what happens in the world. You know, smartphones, you know, when they started, they just went on for years and years and years, no matter what happened, pandemic, wars, recessions, whatever. And then we do a bottom-up stock selection and valuation. You know, and like I said, everybody has some sort of formula for screening stocks, right? I call my initial screen to look for disruptive microcaps the chaos formula. And it's because that's what these companies thrive on. They thrive on chaos, essentially, upending markets, you know, and this is simply a 5-point checklist to filter out what I really think has a chance to produce big gains in short order versus, you know, what doesn't, right? So chaos is an acronym. It evaluates a stock based on 5 simple criteria. change, hype, acceleration, ownership, and size. Change is really, the foundation of chaos and disruption. These small companies, they burst onto the scene and they change things in a big way, laying the foundation for exponential growth and asymmetric investment opportunities. The hype part is basically looking for trends that are being hyped, things like, again, artificial intelligence, automation, precision, or personalized medicine, and then finding companies that nobody's really heard of yet, that they're going to enable or benefit from those trends. The acceleration point, that's just about the potential for exponential growth. Obviously 20% growth year over year is great, but 100% plus growth is how you really see big gains in short order. Ownership looks at just that. It makes sense to go after companies whose founders, management, and board members own a lot of the stock, because they have the same interests as we do. That's, basic common sense. You also want to follow great investors, right? Like in biotech, for example, the Baker brothers, they have a long history of making big money in that tough space. So if you're looking at a biotech stock that checks all your boxes and the Baker brothers have, just invested too, that helps reinforce your thesis. And then finally, when it comes to size, the S in chaos, the math is just a lot easier if you're going after small companies. They're going to shake things up in large markets, versus anything else like the opposite, or that, it's a lot harder to grow from 100 billion to a trillion than from 100 million to a billion. Just simple math. And then once identify a potential investment through the chaos formula, then it's time to dig deeper. Of course, talk to management, pick apart the financials, develop revenue and valuation models for the company for the next 5 to 10 years. Dotting all the I's and crossing the T's and whatnot. So that's how I approach it.
No, I love it. Listen, in microcaps, I don't think there's a better name for an investing style than chaos. So I absolutely love that. That's how it ended up being in terms of the, all the acronym kind of worked out nice, right? But real quick, before we dig in, another one question follow up on the formula and all that. You talk about how the idea is you want to make big gains in short order. Because folks might be listening to this like, okay, he might be recommending a stock based on this formula and all this criteria, but what is that in terms of big gains in short order? What is the time frame really? So let's better understand that.
Yeah, sure. So yeah, we're not traders in Project 5X, the microcap advisory. We're investors. We want to get in early. I don't mind if I'm the first analyst on the scene. It's kind of great, actually. I mean, that you get chance for really explosive gains that way. And we're looking 3 to 5 years. I mean, when we started the service in early January 2019, and we've had a few stocks that we were able to sell for big gains after a year. And of course, that's going to be the case throughout. And then they're going to be longer periods too, 5, 6, 7 years. But in general, that window that we're looking at is 3 to 5 years. Like let's say going from $100 million company to $1 billion company, or $50 million company to 500 million, something like that, and then moving on for that next explosive opportunity. But yeah, it's we are investors, right? And you can't nobody gets rich overnight. I mean, you do, but it's all luck. I mean, the way to build real wealth, and obviously there's lots of risk management that goes involved with this. I don't recommend using allocating your entire portfolio to microcaps. Right. Of course, it's a portion, and to get outsized returns so you can stay ahead of inflation when it's high and stuff like that. But yeah, so 3 to 5 year time frame is what we're targeting with each recommendation.
Very cool. All right, so now let's dig into chaos formula a little bit, and one I want to actually dig in on first is hype. And because you mentioned how there's certain trends, and like especially right now, like AI is kind of the main hype train right now. So when you think about hype, when you're evaluating as part of your criteria, how do you avoid maybe some of these maybe false hype sectors? Not necessarily saying they're, they won't turn around by any means, but there's quite a few of them right now that, between cannabis and crypto and biotech didn't have much love for, like how do you avoid some of the downfalls of getting sucked into the hype train of some of these sectors in order to find value? Yeah, I mean, it's sometimes completely unavoidable, right? Just, but to some degree, obviously, but that's why it's good to have that's just one box to check, right? And you got to go through all the other ones too. Like there still good cannabis stocks? I don't know right now, obviously, but it's as far as things like psilocybin, with the magic mushrooms companies that are working on therapeutics to help addiction and depression. There's some
super promising stuff there, and there has been, for decades and decades and decades of basically word of mouth, essentially results rather than real clinical trials. And now we're getting the real clinical trials are showing the same thing. But yeah, so I guess so on one side, it's kind of it's kind of impossible to not get sucked in, but at the same time, that's why you have the multiple checklists, so you don't like just go all in on something like, if somebody adds the word blockchain to their name, back in 2018, and everybody piles in on that. Everybody knows that's a faker, right? It's not a real thing. Just and you see that, you've seen that throughout time with 3D printing and AI right now, obviously, of course, is a big thing. Anybody adding was it
was it Jason Calacanis that put out that tweet, or was it David Sachs? Somebody put out a funny tweet last week that was like, "Hey, every crypto company should should pivot to AI." And I'm like, MicroCap me immediately was thinking to myself like, "Oh my goodness, this is like every the mining that failed went to cannabis, that went to psilocybin or psychedelics." Like, wouldn't be surprised if now they're ABCD AI, that they have this new AI source that's powered by ChatGPT 4 because they paid the premium price or whatever, So so
it's still there, and you can't get around that, obviously. But you got to also, like, when it comes to the hype stuff, you dig into the management team. Obviously, that's why I do a lot of boots on the ground, a lot of meetings with management. I think that's beyond important with these tiny little companies for this kind of strategy that we have. Obviously, you can take a different strategy, and you wouldn't need to, like, I don't know, if you're doing sentiment or momentum or something, you wouldn't really need to talk to management as much. But I mean, but for what we're doing, getting to know those guys and understanding what they're really doing, and when you look at like the AI companies, a lot of the ones that are real AI companies are the ones that don't even talk about it. They're the ones that have been doing it for years and years and years. And what's the killer app in AI is basically doing more with less. I think Kathy Wood said, productivity gains are that's the killer app in AI. So you can get it anywhere, but you do have to sort out the good from the bad, and there's tons of bad out there too, obviously. So
oh no, I'll be honest, like, when I think about AI, and we can talk about this a little more, but at least from my perspective, I've seen that as like the beacon, because there's been a feeling like a lot of false starts in some of these new sectors, new things. It's not to say there might not be a place for crypto. It's just right? Like when we talk about utility, like there hasn't, like, whose life has been better as a result, or whose job has been made easier. But then when you ask that same question to AI, it's like, oh, well, there's like this, that, and the other thing. So there seems to truly be legs within this. That's not to say there's not going to be charlatans, obviously, that are going to be so used to AI, but it's just putting lipstick on a pig. But AI is definitely interesting.
Yeah, absolutely. I mean, I use ChatGPT. I started, trying to play with it for work purposes too. And, it's like basically having a decent, kind of little junior analyst at your fingertips. That does work pretty fast. You better check it. I mean, you saw the problem with the, there's attorneys that are now in hot water because they basically, I guess, submitted briefs that ChatGPT had just invented like these cases that made sense to prove an argument. It's like, well, and then the guy was like, I didn't mean to deceive you. It's like, well, none of these cases ever happened. They're not real. And so, I mean, you got to be careful though. So, humans still have a big.
It's still new. It's still new. But there's definitely utility, right? And that's what's that's what's fascinating behind it. So I think I'm not saying like, every AI company or every company now that adds AI to their name or actual real AI company will win, but it's definitely now it makes a lot of sense. But there was there's a lot of those companies in microcap though that had this kind of predictive technology type stuff where they were already kind of laying the groundwork for what they could develop into an AI tool where, there's SaaS companies that were just data collecting like crazy. And now they can then sell back that data or sell back a tool to those companies and be like, hey, AI tool now, and do that kind of stuff. So that should be kind of interesting to see moving forward.
Yeah, for sure. I mean, like I said, they called it machine learning back in the day. Then, and then that's a lot of them still do. And, obviously, machine learning part of AI, yes. So everybody gets the terminology gets confused. I lump everything under AI just for simplicity's sake these days. But But yeah, there's absolutely tons of that. I mean, like there was one of the companies I was going to talk to you today about, was kind of like that in the sense that, it started developing its AI software platform like a decade ago. And, before anybody was really talking about this, but,
who are we talking about? Let's
yeah. Oh, sure.
Pitch away, man. Let's
yeah.
go.
All right.
Throw that fastball.
So the first company I'd like to talk to you today, it's called Black Sky Technology. You probably heard of these guys, BKSY. They're really, in my view, changing the game in satellite imagery and analytics. They own and operate their own proprietary constellation of 16 high-tech small satellites. So these things are about the size of a mini refrigerator. They're about $10 million. They weigh 120 pounds. So they orbit around the equator and capture about 90% of global GDP within their field of view, according to Black Sky. Government customers rely on Black Sky tech to track things like, important changes around the world as they happen, so monitoring what potentially hostile actors are up to, or events at strategic locations. And their commercial customers rely on the tech to, for lots of applications like monitoring airports or, shipping ports, and the movement of commodities around the world. So we're basically talking about high frequency monitoring. They call it a new way to see the world, as often as once per hour with these things, which is pretty cool. So you can really see in real time, what's changing as it happens. And it's really high frequency monitoring of you could say the most important strategic locations and economic assets and events around the world. For example, these guys, their satellites took some of the first images of Russian activity in Ukraine for this, in the most recent, the invasion. And they've allowed, its customers to track border crossings and nuclear facilities, infrastructure and facility damage. And of course, military convoy locations and movements. But, now going back to the AI thing, it's not just the high frequency satellite monitoring that makes Black Sky special. The real secret sauce is their Spectra AI platform. So this platform processes the data that from Black Sky's constellation and from these other third-party sensors, and it gives customers actionable insights that they need. So Black Sky really considers itself a software company. It's got a top-notch aerospace group, of course, but the majority of its technical staff is actually software engineers and AI experts. That's important because many of their customers actually don't even care about the satellite images. They just want the analysis from the Spectra AI platform. For example, one of Black Sky's customers is a hedge fund that trades commodities. It wanted insight into supply and demand of coal to have an edge in trading. So it tasked Black Sky's satellites with, you do it on your computer or you do it on the app. The customer tasks the satellites themselves, which is pretty cool. So they task it to track important stockpiles of coal. As the satellite took pictures of the stockpiles throughout the day, the AI analyzed the images to figure out how much coal is in the piles and how much is being added or removed for transport. And the fund can then trade on that information advantage, essentially. So, pretty cool if you ask me.
That's a good start with this one. In applying the chaos formula to when you initially found this idea, around what time frame did you come across Black Sky? Like, was it pre-commercial or after they started commercializing their tech?
Yeah, it was after. Okay. My first meeting with them, was it was probably 2 years ago, it was just not. I didn't see enough from the revenue acceleration side, which is part of at first, it was recently. Now we've seen lots of just the addition of tons of contracts, big lucrative contracts. I'm talking like with NASA, the Army, the ministries of defense in foreign countries, Air Force. Just this morning they announced a $30 million contract for high frequency imagery services to an unnamed international defense customer. It was, they were a little, most of these things, when I come across them, it's, so I do have this thing called Breakthrough Disruptors, which is a section of the newsletter where I talk about, companies that are really, really cool and doing all kinds of neat things, but, just don't check all the boxes of the chaos formula yet, or, they're too illiquid for our subscribers. Stocks only trading 25 grand a day. You can't have a bunch of people buying it. You're gonna shoot it up artificially, hundreds of percent. So these breakthrough disruptors is where I will introduce some of these things. And I don't know if Black Sky I forget exactly if Black Sky was one or not, but a lot of the companies that I end up recommending, I'll introduce them in this breakthrough disruptors, and we'll monitor them as they progress and essentially graduate. It's almost like graduating to it's almost like uplisting kind of, but in our view. So like, it's like, okay, now they've hit the point where it's, it's a full recommendation now because, XYZ, now they check all the chaos formula boxes. Now that stock's liquid enough, now everything is in place. So it's usually, maybe a year, oftentimes a year or two before. Yeah.
Gotcha.
Does that answer the question?
Yeah, no, that makes sense. And I thought, by the way, before we move forward, are you currently a shareholder in Black Sky Technology?
Yes. Sorry, I've recommended Black Sky to my Project 5X subscribers, and I am a shareholder as well. Yes.
Very
sorry.
Cool.
Yeah, I meant to mention that. Sorry.
I was gonna say, like, when did you get in? Because I was looking at the chart real quick. Because what it was it a SPAC, and then like these like what?
Yeah. Yes, that was what year was that?
2020.
Yeah, and I forgot the name of the SPAC or whatever would happen. But all those things got slammed. We've got a couple other de-SPACs in the portfolio that just are doing well, generating revenue, and just those things just got murdered for a while. I don't know if that's going to come back or not. And to me, I don't know. A SPAC was just a different way of going public, and I thought it was kind of like almost more honest in a lot of ways, in the sense that you could tell potential investors more than you really could on or retail investors at least. But it's not for me to say whether the valuation is off. But yeah, we got in right around I think 175 ish. It got down to like 110, and it's above 180 right now. But the move from 110 to 180 plus is in the past few weeks. So 65% plus. Volume is increasing. So it's just, so we're seeing now the stock's still under the radar. I think it's about $1 million a day as volume. So that's still quite low, obviously. But for $200 million company that's $70 million in revenue last year, growth was 70%. I think they can get to 500 million, let's say, in 5 years. In a market that's big enough for lots of players, worth tens of billions of dollars. But these are the guys that are already getting the important government contracts, and that's what a lot of the commercial folks look for too, especially the defense contractors and whatnot. You get in there first with the government, and then you're known as best of breed, and you're like as the go-to solution. And that's the way Black Sky is positioning themselves right now. I should note also, just if anybody wants to go look at this and compare to satellite companies in the past, the CapEx structure is completely different than the older companies like Maxar, which Maxar satellites are hundreds of millions of dollars. These we're talking 10 million a pop. So like Black Sky has a 16 satellite constellation, so let's say about 160 million in CapEx. You got to replace them every 5 years. So it ends up working out to like, let's say $30 million a year or so for the CapEx hit, because, Black Sky staggered the launch of these things over the past few years. And they're also building next generation satellites right now with even better, capabilities and able to go lower light conditions, so you can monitor things even longer throughout the day. So yeah, I'm a big fan of the stock. That's why I own it. And it's doing a lot of cool things. Yeah.
No, I should get management on for a due diligence series. I think that
absolutely.
I want to learn a little bit more. Real quick though, before I let you go, before we move on to the next idea, because I think that also has to do with some of the trends that are going on right now. In terms of using Black Sky as an example for ownership, I think I was looking at Yahoo Finance. What is it? The Insider, what is it? It's Insider's own about 13%.
Yeah.
Can you get into it a little bit more as to what your threshold is for insider ownership and what you would like to see?
Yeah, absolutely. The more the better from the insiders, obviously. There's lots of companies you can find out there with 50, 60, and whatnot. Let's see. Where was these guys that
I'm sure my data is wrong. I was using
I think it was like 8.2 with the 11 named executives. And that's not, I even wrote in the newsletter, like, that's not the best I've seen, obviously. But it's enough. You do want more than, as long as there's one or two or strategic guys too. Also, like with Black Sky, Peter Thiel owns 15% of the company through a couple of his his ventures. Obviously he's one of the biggest VCs and best investors in the world. So the fact that he owns 15% of the company, that's a to me that's a bonus, obviously. And there's also the French aerospace company, Dales Alenia Space. They own like 15% of the stock also, and they have a joint venture with Black Sky together, and that's the entity that makes the satellites together. So those guys, I mean, those are more like insiders as well versus anything else. They're going to be there for the long haul. So really you see that insider ownership picture it pick up a lot. So that's why, yeah. So it's not just about the CEO, the founder or whatever. It's also strategic investors like that, or do they have a partnership like with Dale's Alenia Space, to create an overall picture of, does it check the box? And yeah, it's more holistic or qualitative than any kind of sheer cutoff. But the exercise itself to look into it really is the value of it, and to make sure yes, okay, there's enough there where management is going after our interests as shareholders, and then also, okay, cool, here's a kicker, because Peter Thiel obviously loves this company, and he's been invested for quite some time, and then retail, sure. And then a little bit of institutional ownership. Like to see that, not always possible, especially with some of these smaller ones, especially if they de-SPAC or something. And but yeah, that's does that make sense?
No, totally, yeah. And look, and it also makes sense, why you also have to keep in mind your subscriber base as well. I mean, it's part of your criteria too, but like, because I've quite a few folks that I very much respect on here that come on, they're like, all right, also shares outstanding. Like when they look at the share structure, they're thinking to themselves too, like, all right, I don't want, maybe 50 million is my max, right? Or right. Definitely not over 100 million, right? I think 139, which 255 million market, that's not too bad. But it also makes sense from your end, because you can't have, like, I mean, listen, I'm sure there's some illiquid names out there that would love to be mentioned on the RiskHedge chaos formula, stock to buy. Don't get me wrong, but at the end of the day, like, you have to be careful with that.
Oh, absolutely, yeah, for sure.
Yeah. So one other question I had, and this isn't to Black Sky in particular, but just thinking about AI, because we've been talking about a lot. That is the key trend right now. That's probably the name of all these different failed companies that we're going to be seeing in the next 6 months, adding to their name. What would you say from your perspective are the biggest risk factors when thinking about AI and some of these companies trying to implement that technology as part of their, this is what we do now?
Yeah. I mean, the main thing is probably just, are they fakers, or are they, for real? And that, and that comes with, getting to know management, and really hearing them tell the story, and understanding, having, talking to the tech folks in the company, talking to industry insiders, people like, because I'm not a software engineer, obviously, so I have to be able to try to figure out if these guys are full of it or not, using other means, and it's basically you can tell if somebody's blowing smoke a lot of times. I mean, and how they go about like starting it, like like I said, a lot of the companies that are really good at AI and have been doing it for years, don't talk about it. They don't even mention the term still. And now of course they're starting to more now, that because it's essentially an asset to mention it more. But yeah. So have they been doing it for a long time? Are they a faker, or are they for real? Are they is management full of it? Those kinds of things. And like I say, you can't get it right all the time. I've been duped plenty. I've been duped plenty of times. Obviously, I'm not infallible. But yeah. But yeah. And then putting that all together with the rest of your kind of formula or whatever it is, that's why everybody has multiple boxes to check. There's not one box that's going to get, and it's going to makes it deserve your investment, right? You got to be a lot of different checks on the list. So just being careful is the way to approach that. But yeah.
Yeah, no, I dig it. I'm picking up what you're putting down right there. Yeah,
Cool.
yeah,
I go off on tangents sometimes.
no, well, look, I mean, I guess when it comes, I guess like the main reason I want to ask that is really just because everybody who's listening to this and in microcaps now, I've said, this is the last time I'll say it, but like we all know that there's going to be those, some of those companies that will be doing that, so
yeah,
I think that's just like kind of one of those things where PSA, beware, it's going to happen. Like there's going to be companies adding AI to their thing. And that's not to say that there isn't realness from companies that are now launching an AI tool,
right,
or anything like that. Like that could be real and that could be legit, and that by all means could be real. It's just beware of the ones that are actually changing their name
yeah,
to include
absolutely.
AI in it. That's really the ones that you gotta probably
totally agree. Just one more thing to add to that too. You could also look at it and just the layers of the tech itself, basically, and so you've got the hardware layers, the hardware layer of the chips like NVIDIA, AMD, Intel, then infrastructure like the cloud and the storage solutions, and then the application layer, and the application layer, that's where a lot of the disruptive companies are going to come from, obviously. But one way to minimize your risk in the AI space would be to just focus on the hardware and the infrastructure layer.
Some picks and shovels, yeah.
Yeah, and so that's that way you really don't have to deal with that. Are these guys legit or not in this? And what they say they're going to do with this PR, and whether that could ever possibly come, materialize or not.
Is that segueing into your next name that you wanted to talk about here?
Oh, no, that would have been a really good.
That would have been such a good segue right there.
Now it's just an awkward pause. Like
now it's like, yeah, now we're talking about fertilizer. No, I'm just kidding.
Yeah.
But yeah. So tangent, I guess,
yes.
or how? Yeah, I guess it's or changing gears. We're gonna change gears. How about that? So changing gears. Assuming that you had a couple ideas that you wanted to come on and talk about today. You didn't tell me beforehand, so
nope. Yeah.
I guess changing gears. What's another one that you're looking at that kind of fits this chaos formula that you're
absolutely yeah so Beam Global, and you got to be careful of this company because the Beam
I know Desmond a long time.
Yeah, Desmond's great. His energy is just is infectious.
Not a shareholder, full disclosure.
Okay, I am a shareholder. Okay. Just before I say that, I've recommended it in Project 5X to my subscribers. The stock, both Black Sky and Beam are actually both still below my buy up to targets. So that's just an FYI. So Beam is spelled BEAM, but the ticker is BEEM because BEAM, the ticker, was taken by Beam Therapeutics, a biotech company. So it's confusing. So just be careful of that if you look into it.
And not a shareholder of Beam Therapeutics.
Yes, sure. Right. Oh yeah, me neither. Yeah. So Beam's really disrupting the electric vehicle charging infrastructure market, and it's got this patented, like, as you know.
That was a good segue. The infrastructure, the picks and shovels market for.
Yeah, you're right. Yeah, I could have gotten there.
Maybe not AI, but EV. Okay, continue. I'm sorry. I will not.
No, yeah, absolutely. No, it's good stuff. The patented EV ARC, it stands for Electric Vehicle Autonomous Renewable Charger Product. So this is really the world's most scalable, fastest deployed, lowest total cost of ownership EV charging infrastructure solution. As you well know, it's not tied to the grid, and that is super, super important. Obviously, because the grid simply doesn't have enough capacity to provide all the fuel. It's literally what it's providing, fuel for future EVs. The Hoover Institute at Stanford says we'll need roughly a doubling of the size of the grid, along with a greatly expanded role for grid services such as electricity storage, just to handle the move to EVs. And that's a multi-trillion-dollar undertaking. It's not going to happen overnight. And meanwhile, we're already starting to see the grid struggle to provide enough electricity for today's EVs. Sure, you've all heard from in California, residents were being asked to avoid charging their cars at their homes during peak hours of 4 to 9 p.m. Okay, sorry. Now back to the EV ARC. It generates and stores all its own electricity using solar panels and batteries. It fits inside a standard size parking space, and you don't lose that valuable spot, right? Because the vehicles park right on the base pad. Plus it's flood proof up to 9.5 feet because all the electronics are elevated under the solar canopy. And finally, probably the coolest thing about this, there's no construction necessary. to install an EV ARC. There's no electrical work, there's no permitting, there's no utility bill, and there's no vulnerability to blackouts. It takes just one person a few minutes to set up an EV ARC, and it works with any different charger on the market. That's important because it doesn't matter who wins the charging wars. Chargers always need to be mounted on something, and they always need a source of electricity. And that's just what the EV ARC does. It just does it off the grid using solar and battery power. HC Wainwright has a 1-year price target of $30 on this stock. I think that's doable, actually. It's around 10.50 today. They did 13 million in revenue past quarter, which was up 245% over last period, over the same period last year. So right now, really, the company is really just hitting its inflection point. And you hear Desmond talk about it. He's always excited, but he's never been more excited. And right now, and at this point, it looks like the company will easily hit my 2023 revenue target of 50 million. Meanwhile, just real quick, it's got 130 million in pipeline potential orders. If they convert at the same rate it did last year, that's 124 million, and that'll turn into hard contract orders. And one final thing is the cash situation does look a little bleak. If you just glance at the balance sheet, the company has just 1 million on there, but it actually has about 5 million in the bank right now, plus an untapped $100 million line of credit. So it has plenty of liquidity to finance growth if anybody's looking into it or whatnot. And again, I am a shareholder and I have recommended it. But yeah, sorry, but that real quick, as you know, I just don't think they're just these solutions, these things range from like 60,000 to 80,000 that they sell them for, and they're getting orders from everybody in the world and the government. And then commercial is going to pick up too, and I think they're really only going to be strapped by their capacity, which I think is around like maybe 4,000 units, but that's still an enormous amount of revenue with with their capacity that they got now. And I just think nobody's really looking at these guys, and it's just kind of a no-brainer, I think. And Desmond just executes. He does what he says. He'll say that. Sorry, go ahead.
Yeah, I was going to say, correct me if I'm wrong, because listen, I've known Desmond, or I've interviewed him a bunch of times, I think over the last 7-8 years, something like that. Not recently, but I remember one of our first conversations, because I went to UCSD, and I remember in our first convo was, they in the parking lot, that was Beam, right?
Yeah.
They weren't even called Beam at the time. Right?
Yeah, they were I forgot their name. Something Solar.
Yeah, it's something solar. You're right.
Yeah.
but I remember at that time, they were really focused on that custom EV infrastructure solution, and that at the time was, that's where we got into talk about, at UCSD in the parking lot, I think at the Hopkins parking lot, they had the custom solar solution, and we were driving on that. So are they still focused in that space then on doing kind of these custom EV infrastructure jobs, or are they trying to kind of mass produce certain things?
Yeah, it's 100%. Like each EV ARC is basically, the only customization is which charger it affixes to. Yeah, everything else is
design wise. Previously, it was more custom design wise, but now it's more that makes more sense.
Yeah, and it's all, and it folds up really beautifully, and you can put two on like the back of a truck, basically, and have one technician or whatever go out and drop it off and install it. It's all with hydraulics, and you push a button and everything goes into space, and it automatically tracks the sun where it's going to be, where it's going to get the most light for the solar panels. So it's pretty cool to see in person. And they've been working on it for quite some time, and and it's now is the demands finally there. They were kind of a solution in search of a problem before, and now that problem is really rearing its head. So that's where I think a lot of this is coming from.
EV infrastructure, I feel like, because we were again talking about this 8-9 years ago, that always felt like one of those industries where, like, okay, let's survival of the fittest, like whoever can actually survive, they might make it. Not saying Beam will or will not in that sense, but I just remember thinking that at the time of like, okay, I feel like 8 or 9 years ago, this might be a little early. I think EVs here, electric vehicle, all that's going to be here to stay. But I can't tell which ones will be the eventual winners in terms of providing the infrastructure and to make this, a real viable industry or just tailwind in that sense.
Right. Yeah. And that's why, I think the fact that these guys, you can connect these things to the grid if you want, but there's no point. Other than they lose their mobility, and you can move them from parking space to parking space, to different lot to different lot, no problem. And like I said, just you don't have to. There's no construction. There's no utility bill. There's no nothing. It's fully self-contained, turnkey, bam. And the fact that, everybody's talking now. Back in the day, when we were talking about EVs early on, it was more, it's still, obviously there's still there's still a battery issue, but I mean, it was much more so, I think, about the battery back then than any kind of, like actual, like who cares about the infrastructure at that point. And nobody really thought that, nobody was really thinking that, I mean, they should have, that, wow, if we have, hundreds of millions of EV cars, that's going to put a lot of stress on the grid. And considering that the grid's already, I mean, the grid, obviously, maybe the most complex machine on the planet, basically, even though like there are multiple grids, of course, in the US and elsewhere. Yeah, but now there's this big problem with the grid, and the fact that these guys can go anywhere, especially and for in New York, and it's in a snowstorm, provide power for cops and firemen, and and also there, they actually other cars can plug in. It's got like its batteries, it stores the power in batteries, and so first responders can come in and actually use that power also for other things and whatnot. So yeah, so it's, I mean, like, obviously it's not the only solution. I mean, we need to build out the grid more, and more charging stations, but more charging stations means you need more grid infrastructure to support it. But then think about all the use cases though, where you need something that's not tied to the grid, or just it's a backup for when you get brownouts and blackouts and everything. So I think it's really cool, and they've got a real product. It's it's been real for years. It's just the market wasn't there yet, and they weren't great at making it yet. And now everything is a lot more efficient. They get more. I think you can strap like 12 cars to one of them, and at the time they're good for like 265 driving miles a day, I think, if they're charging the day. So and they're being upgraded all the time. So I think cool. So Desmond, like I said, Desmond will, he gets it done. He'll even admit, just like everybody in the tech world, it might take longer than you think, but eventually get it done.
I'll get Desmond on the pod too. I mean, it's been a while, so I would love to hear, the evolution and how they've gotten to where they are today. So, we got about 10, 15 minutes left. You said you had a few ideas. So, I mean, listen, we've talked to how you've utilized the chaos formula to find microcap disruptors and AI and EV infrastructure. I mean, do you got one more that we can kind of dig into that kind of fits this disruptor idea?
Well, so I mean, I think you had you had Shy of Omnicue on the other day, right?
Oh yeah.
Yeah, so week. Omnicue is one of my new ones too. Been meeting with them a lot. I've had a bunch of meetings with them a lot. I am an investor in Omnicue, and I have recommended it recently in Project 5X as well. That's I think it's just really cool what they're doing with the Safe City initiative, with their, and of course their AI too. And that, their AI is hardcore, real deal. I mean, like, it was born out of a project for the Israeli military to protect the country's borders, which, if you're doing that, like, that's serious. Like,
it's no joke.
Yeah, so their tech is above and beyond when it comes to what I really like about them is their Safe City solution. You put their camera scanner sensor at a red light or whatever in a small town, and it monitors all kinds of things, and it can capture. It has a revenue share component where it'll capture like unregistered vehicles, and then the system automatically sends a ticket to to the individual who owns the car, and it can do other things like for insurance, and if you're in a HOV lane or something like that, it could see that. But this is a great way to get the product out there, because it's a new revenue stream and the company splits the revenue from the ticket with the town. And it's a new revenue stream for the town that they never have, and it also and Omnicue also covers the cost of installation. They basically just give them the stuff, give them the equipment, and then the town turns it on, and then the tickets start coming in, and Omnicue keeps 25 to 45% depending on the services, and then the town gets the rest. And so these small towns just love it. And I think that was it Adrian, Georgia. It was like 600 people. The police chief said, it's a force multiplier, and they can't afford not to have it. So yeah, I love Omnicue. And what another thing I love about Omnicue, it's basically just object recognition using their machine vision technology, and they apply it to the supply chain solutions as well. So like their legacy products, as were things like barcode scanners and handheld computers and stuff like that helped a lot of the biggest companies in the world really with their supply chain. And now what they want to do is they got all these blue chip customers, and they want to just upgrade those customers from their legacy products to their machine vision products. So instead of RFID scanner or whatever, you have a heads up display, and the tech and Omnicue's machine vision tech shows you exactly what the product you're looking for in a more holistic, full way, rather than just when tires, for example, are shipped to tire buyers, the barcodes and things often fall off, so people companies don't know what kind of tires they actually have, and this can views the whole product in a real like full holistic way. And I think just upgrading a few of those big customers to the next generation machine vision technology, just completely transform this tiny company, make them worth just a hell of a lot more than they are now. The numbers on that really get really big, really fast, really easily, and they have some other solutions too, like when it comes to parking and drive-through and stuff. So yeah,
100%. Yeah, no, when we talked to them last week, or when I put out the interview last week, that was for me to wrap my head around the story, was to better understand the industries they're trying to serve. Because once you kind of got that and how they can apply their technology, I think the biggest hurdle for me was just understanding how their technology was unique and different compared to some, because I've interviewed a number of safe cities company, trying to do all that stuff, so that for me, I'll put the link to it in the show notes. I think Shai did a pretty good job of explaining like how they are different, and also within the context of what you said, how like one of their first projects was with the Israeli government to track terrorists coming into the country.
Yeah.
That's kind of a big deal. Full disclosure, not a shareholder, but like that's intense.
Yeah, exactly. And that's another thing when you look at these companies, just like, what is their pedigree? Where do they come from? Are they like from Los Alamos or is Israeli? Their tech, the tech in Israeli is second to none. I mean, they're just investors. They're really neck and neck with the U.S. in terms of their capabilities, especially per capita. I mean, it's unbelievable what they do in terms of patents for technology and what's coming out of that country. So so when you see a pedigree like that with a project for Israeli, okay, something might be here, right? And the commercial applications. So it's more reliable, it's faster than anything else out there, and obviously proven and where it counts. So. Pretty cool.
No, I was just in Israel last year, and I met with an investor and I'm blanking on the name, and I so am annoyed with myself that I'm blanking on the name, but they had their version of Silicon Valley, right? That area. I think, my goodness.
I should know this too.
Sorry. My goodness. All right. Well, whatever. We'll figure it out. By the way, I did remember finally the name of what Beam Global was originally called, Envision Solar.
Envision Solar. Yes, that's right. Yeah.
Cool. All right, man. I mean, look, we've covered a lot here today. Gave us a couple ideas that kind of that I think exemplify your chaos formula, which I'm excited to learn more about it, because I'm sure you'll come back on at some point. So, let's wrap it up here. Do you got any final thoughts looking ahead 2023, things that people should be looking at right now, or what are you doing in preparation for going to the summer, end of the year, that kind of stuff?
Yeah, I'm really just trying to expose myself to as many ideas as possible. And I mean, I might not be the best tactic, considering I already said that there are too many good ideas out there. But I've always learned that the more meetings you take, the more you say yes, the more relationships you build. In the microcap world, I mean, it reaps benefits that, like, you wouldn't believe. You always get. I mean, at least me personally, I've always gotten something out of every meeting I've taken. So, never say no to IR folks or different companies who want to tell their story. It's always a learning opportunity. And so I'm using that to basically just build my list of, potential names that'll then go through chaos, the formula, and the nitty gritty and all that.
Perfect. That's great. Just turn over every rock, man. Just keep putting in those 10,000 hours.
That's right.
I love it. Cool, Chris. All right. Well, with that, where can our audience go and find more information on you as well as RiskHedge?
Yeah, sure. So the website is just riskhedge.com, RiskHedge. There you can read about Project 5X, which is my microcap advisory. We also have a free newsletter on there called RiskHedge Report, in which my colleagues and I write about all kinds of different investment ideas, and it's very timely. I'm not on social media right now, but I will be soon. So, Bobby, if you have me back sometime, I will be able to share that too. I think that's about it. So thank you so much for having me. This was a lot of fun. I really appreciate it.
Absolutely. Get it. So we're recording this on Monday, June 12th. Come on, get on Twitter at least between now and next Tuesday for me, please.
I have a meeting on Thursday about it. So
all right, just get the name up there.
Yeah.
Anyways, Chris, always a pleasure, man. Thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. I look forward to our next update.
Thank you, Bobby. Really appreciate it, man. Take care.
Thank you.
Thank you.
Podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.